Nigeria's capital market contribution to GDP rises to 33% with over 123.93 trillion naira. Foreign investors in Nigeria's minerals sector to benefit from Cape Town Convention protections, says Alake. Oil slide says U.S. tariff hike raise jitters over global economy. South Korea's Kospi hits fresh high as Asian markets brush off Trump's latest tariff. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. Now, the current value of Nigeria's capital market is more than 120 trillion naira, a financial powerhouse that has more than doubled in size in just a few years. But beyond trading, the bulls and the bears, what can the market do in growing infrastructure, innovation, or entrepreneurs looking to grow their businesses across the continent? This was central at the third Professor Uche Walike colloquium in Abuja, where the National Assembly, the Treasury, and the nation's top financial minds advocate the deepening, broadening, and connecting the Nigerian capital market to meet global standards.
Trade agreements without roads, railways, ports, energy systems, and digital connectivity are aspirations without arteries. For Africa to trade efficiently within itself, goods must move seamlessly across borders.
If we didn't have a capital market in Nigeria, we probably would not be successful in raising all those large amounts of monies that we raise for the government every year. So I'm sure you all see it in the budget.
As regulators, operators, academics, and policymakers, we share a collective responsibility to ensure that our market remains transparent, efficient, resilient, and fully aligned with global standards.
Is committed to playing a leadership role in building transparent treasury systems, credible financial reporting frameworks, and resilient capital markets that serve not only national interests, but continental prosperity.
I encourage us to identify actionable recommendations that can translate into legislative initiatives, regulatory improvement, institutional strengthening, and measuring reforms.
Innovation in Nigeria is getting a major funding boost as the Ministry of Budget and Economic Development through Nigeria Sovereign Investment Authority and the Japan International Cooperation Agency seal a $50 million Impact Innovation Fund to power the next generation of startups. Innovation is fast becoming a driving force for Nigeria's future, and today a new partnership is set to power that transformation. The Nigeria Sovereign Investment Authority, NSIA, in collaboration with Japan International Cooperation Agency, JICA, has signed a $50 million Impact Innovation Fund to support emerging startups. A major initiative designed to support early-stage startups tackling Nigeria's most pressing social challenges.
A country as big as Nigeria needs scale. And so whilst the $14 million being put forward by JICA being matched by the 20 from NSIA, we cannot afford to stop at the 34. The minimum has to be 200.
We want partnership. We want more Japanese companies, more Japanese capital to come to Nigeria.
The government of Japan hopes this new program will take root in Nigeria and bear fruit swiftly.
With $14 million in grant funding for JICA and up to $20 million in matching investment from NSIA, the initiative is designed to provide patent capital, helping startups grow from ideas into viable businesses. The fund will provide early-stage financing and technical support to businesses developing solutions in agriculture, healthcare, education, energy, and water management. The Naira sustained its appreciation across segments of the foreign exchange market during the week as holders of the US dollar continue to offload their positions amid a decline in rates, leaving many nursing losses. Now, how much is the Naira exchanging for other currencies? Let's see. The National Automotive Design and Development Council has commenced the implementation of an import deletion program aimed at promoting local manufacturing of motorcycle, tricycle components, creating jobs and conserving foreign exchange. The Director General of the NADDC, Wemimo Osanipan, said this at a stakeholders sensitization meeting on the implementation of the import deletion program for motorcycle and tricycle components parts in Lagos. Osanipin said that one of the statutory mandates of the council is to identify automotive parts currently being imported into the country and recommend those with local manufacturing potential for deletion from the import list. Import deletion means such components will either no longer be imported or, if imported, will no longer enjoy tariff incentives. Now, Nigeria has hosted the 2026 Technical Group meeting of the Intergovernmental Group of 24 in Abuja, with senior finance officials calling for urgent reforms to ensure fairness in the global financial system. The meeting brought together policymakers and economic experts to deliberate on mounting trade policy uncertainties, which they say are significantly constraining growth across emerging markets. The officials emphasized the need for coordinated international action to stabilize trade flows, strengthen multilateral cooperation, and protect vulnerable economies from internal shocks. Nigeria as host reaffirmed its commitment to championing the interests of developing nations in global financial governance discussions. Nekauko reports.
For decades, the integration of developing economies into global value chains was promoted as the best way for them to grow and industrialize. For many, it worked, as export-led growth models lifted millions out of poverty and generated the foreign exchange earnings that funded public investment. But with rising trade tensions and protectionism, that model is now under stress, and the G24 meeting in Abuja serves as a forum for developing economy policymakers to chart a new course.
There's a lot of engagement going on even outside this forum, and in the coming years we should see some progress on cost of capital, declining cost of capital, lower interest rates for developing countries.
So we look forward to an approach that aligns global development finance priorities emphasizing innovation, as I've said, blended instruments, and expanded concessional windows.
We believe we must be able to evolve market-based system that can underwrite financing mechanisms.
Okay. Now to speak on takeaways from the G24 Technical Group meeting is the Director and Head of Secretariat, Dr. Yabo Marsha. She joins us virtually from Lagos. You're welcome to Business Express.
Thank you very much for having me.
Okay. Well, to delve into it, the 2026 G24 Technical Group meeting, which just wrapped up here in Abuja under the theme Mobilizing Finance to Promote Stable, Inclusive and Job-Rich Economic Transformation, brought together finance ministers, central bank governors, and policymakers from developing economies. What would you say were the most important key takeaways from the discussions, and particularly around mobilizing finance, addressing debt pressures and driving inclusive growth?
Thank you very much once again. Now, I think from my own point of view and from the point of view of some of the feedback we've had from attendants, the overarching kind of thinking is that one, that global growth is still going to be low, and for that reason, developing countries should expect to also have lower growth. And that is partly because inflation is going down, but not that quite much. But trade is a major part of it. Trade is projected to grow only at about 0.5% this year, and that's even a markdown from earlier forecasts. And secondly, the poor external financial conditions, because in order for countries to grow, they will need to mobilize resources, and this costs money. They have to pay high interest costs. So that really is a challenge that many countries feel that has to be addressed in order for them to be able to actually achieve inclusive and transformational growth. Now, in terms of where countries think things will change, one is the cost of capital. There's a lot of engagement at within the international financial capital on how to lower the cost of capital, and I think a major aspect of that is one, engagement with the credit rating agencies on how they actually rate developing countries, because that's a significant element of the interest costs that countries face. But also how the international banks, the multilateral development banks, the IMF, can better support countries, either by issuing more guarantees, blending more finance, and being able to at least make reduce the interest costs that countries face.
Okay, now from the opening sessions, there was a strong emphasis on shifting away from costly external borrowing, just as you mentioned, toward private capital, domestic reforms, and innovative financing, as highlighted by the Nigeria's Finance Minister, Wale Edun. In your view, how central was this pivot to private sector-led growth and South-South cooperation to the overall conclusions of the meeting, and what specific strategies emerge as priorities for member countries?
Yes, I think you're quite correct in that synopsis. But the way to look at it is that given the external environment, how uncertain it is, then attention has to focus on domestic policies. And so the two big buckets of domestic policies on the fiscal side, for the government to be able to reform its domestic resource mobilization framework so that it can mobilize more revenue and at an efficient rate, that is, expand the tax base and be more efficient in the way it mobilizes the revenue. That's on the fiscal side. And then on the monetary side, we've seen a lot of that happened in Nigeria more specifically. Lots of reforms on exchange rate, on the interest rates, on the monetary policy framework. But what needs to happen then is to be more focused on deepening the domestic capital market. Many countries, including Nigeria, still have the capital markets that can grow significantly. So by initiating policies, maybe something like hedging of foreign currency, bringing in expanding the rate of financial inclusion so that more money comes into the system, which is then on lent to the private sector, and actually being intentional about lending to the private sector so that the banks are not just lending to government alone, but have a relatively balanced portfolio, which would then spur some further private sector growth.
Okay, the World Bank projects that emerging markets and developing economies will grow at around 4%, which sounds reasonable on the surface. Yet in your opening speech, you argue that this level of growth is simply not sufficient. Why is that? And what rate of growth would you actually move the needle for countries like ours? I mean, Nigeria.
Yeah, well, I think the important point is that 4% projection is on the aggregate, okay? So there's a wide range of heterogeneity there. Some countries are actually going to grow at 1%, and some will grow at 7%. So it's an average. Now, why is it not enough? It is not enough because countries face a lot of challenges that requires them to grow at a much faster rate in order to address those challenges. And I speak of infrastructure deficit, energy deficit, which we also see in Nigeria, and at the quantum of energy investment alone could be something in the region of 3% of GDP consistently for 5 years before we can even be energy sufficient. And then you need investment in climate change and environment. You need investment in human capital, education, health, skills acquisition. So when you need all of these, then 4% growth is really not enough to the needle, to use your expression. A particular percentage that will work. I think that it depends on each country's circumstance. But more importantly, it also depends on how much finance they can mobilize in order to push that growth. Don't forget that for every growth depends on how much money is actually put in all these different projects. And so a lot of things have to happen for things to improve, but with better financing conditions, both domestically and externally, and a more intentional program how to be more competitive in the both domestically and externally. Trade will continue to be a challenge over the next year, but that is mainly from the uncertainty side, because there's a lot of uncertainties on tariff, on policies. But over the medium term, we expect many countries will be able to take advantage of regional value chains, maybe Nigeria trading more within the West Africa region and with the Africa Continental Free Trade Agreement now operational. That could also provide a framework to export-led kind of production that would then be able to contribute to growth, and also to foreign currency earnings.
I'm afraid we have to leave it there. Dr. Yabo Basha, it's been a pleasure having you on the program.
Thank you very much. Thank you for having me.
Yeah. And now, silver extends 3-session climbers, price action tightens, setting up a potential breakout from a 3-week range. Let's now take a trip to the commodities market. Equities market enjoyed a bullish week as investors gained 8.1 trillion naira. Details with Olaika Ojo on summary on how market fared last week.
The NGX All-Share Index and market capitalization appreciated by 6.95% to close the week at 194,989.77 basis points and 125.164 trillion naira. A total turnover of 7.662 billion shares worth 252.566 billion naira in 345,118 deals were traded by investors on the floor of the exchange. The financial services industry led the activity chart with 5.625 billion shares valued at 113.599 billion naira in 129,729 deals, contributing 73.41% and 44.98% to the total equity turnover in volume and value. The services industry followed with 493.131 million shares worth 5.866 billion naira in 30,396 deals. The third place, the oil and gas industry, had a total turnover of 425.657 million shares worth 35.742 billion naira in 23,136 deals. Trading in the top three equities, FCMB Group PLC, Access Holdings PLC, and Zenith Bank PLC accounted for 3.594 billion shares worth 69.147 billion naira in 33,802 deals. A total of 3.837 million units of exchange-traded products valued at 547.380 million naira were traded in 5,252 deals. For bonds, a total of 246,779 units valued at 256.629 million naira were traded in 39 deals. On summary of price changes, 71 equities appreciated in price during the week, 41 equities depreciated, while 36 equities were unchanged. Olaika Ojo for Business Express.
Well, from Olaika, we head to Maria Ado-Zakari, where she's standing by to tell us how markets are responding to latest Trump tariff moves. Maria Ado, is over to you.
Well, international markets are mostly bullish to begin the week. Europe starts as markets react to new Trump tariffs ahead of regimes. DAX of Germany shed 0.44%, FTSE tops 0.19%, and we have the CAC of France following at 0.07%. Asia markets traded mixed. We have China and Asia markets which are closed for holidays. Hang Seng Index is trading at 2.53% at 27,081. U.S. stock futures fell on Monday after President Trump said he's raising his global tariffs to 15% following the Supreme Court's decision to strike down the president's reciprocal tariffs. The Dow dipped 0.33%. We have S&P 500 at 0.37% lower. Nasdaq Composite follows at 0.55%. Now to Africa, markets are mostly bullish to begin the week. We have South Africa JSE top 40 at 0.92%. Tunisia Tune Index up 0.91%. Namibia All-Share Index reflects at 0.41%. And we have Ghana at 0.73%. That's Global Market for Monday. I am Maria Ado-Zakari. It's back to Musa.
Well, it looks like investor sentiment is high in the most African markets there. Well, thank you, Maria. This is where we end today's edition of Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on the NT's channel. Business Express returns on Tuesday by 9:30 a.m. I am Musa Abubakar. Enjoy the rest of your day.